What's going on, everyone? Welcome back to the channel. If you're watching us on YouTube, Facebook, or LinkedIn, today we're talking about what's been happening in the Chicago suburbs real estate market from a real estate perspective, as well as a mortgage perspective. And there's a lot of headlines going on with the national news, yada yada yada, and scaring a lot of people. So today I have a special guest, Skip Brown, my preferred lender. We help a lot of people, buy their forever homes and buy their first homes. And he's the man with the plan and will definitely guide us in the mortgage direction. But Skip, welcome to the show.
Thank you very much for having me, Brandon. Pleasure to be here.
Yeah. So for the people on Facebook, LinkedIn, and YouTube, I know obviously a lot of people have seen you before, but tell the people who you are, what you do, how long you've been in the business, a little about you, where you're from.
Yeah, you bet. So again, my name is Skip Brown, married to my wonderful wife, Kathy. We'll be 25 years married in May. We've got four children, Holly, Allie, Spencer, and Avery, range in age from basically 20 down to 14, so 2 in college, 2 in high school. Grew up in the Wheaton area, was a Whittier, Edison, Wheaton Warrenville South grad, go Tigers. And then ended up at Wheaton College. In fact, I've got 3 brothers, an older brother that played football at Wheaton College. I have a twin brother, and then younger brother, twin and younger brother and I all played soccer at Wheaton College. True interesting fact is that all of us then married girls at Wheaton College. And believe it or not, my oldest is a junior now at Wheaton College. But then just small world, got a lot of family still in and around the area, but been doing mortgages for 21 years as of March. That's almost older than you are, Brandon. Seen the highs, seen the lows, and still enjoying it and doing it, and still got at least another 21 years in me.
Awesome. Well, thanks for people that don't know Skip. Skip and I help a ton of people, like I said earlier, do a lot of cool things. But to everyone watching, to the 10 people watching right now and everyone else that filters in, drop some comments for us. I'll pop up on the screen. What do you have questions on the mortgage industry, where interest rates are at, or what the real estate market is doing in the Chicagoland area? But, let's just talk about interest rates. It's been a roller coaster of a ride. But right now, where are interest rates at as of 1/26/2023, and how do they compare right now compared to, historically speaking?
Yeah. And you said it's been a roller coaster ride. Rates right now have been hovering in and around 6% to maybe just over 6%, which sounds really good versus where they were at their high point at the end of last year. They got to up over 7%. So like I said earlier, I've been doing this for 21 years. When I first started in 2002, rates were probably right around 7.25%. And you just, hey, that was good.
Right.
Within a year, probably dropped to about 6. A year after that, maybe 5. And then, probably had a low point up until 2012 in and around 3.25%. Mm-hmm. But then what was really challenging, I think, for the market was 2019, 20, 21, we saw rates not move that much, in and around 3. And so last year, 2022, when we saw one directional movement, it was like, what's going on?
Right.
We just didn't experience that, especially new buyers. Right. They don't know what a raising interest rate market has been. Mm-hmm. Historically, these rates are still really competitive. Mm-hmm. It's just our perspective of what a competitive rate is a little bit different because of what happened last year, basically.
Mm-hmm. Mm-hmm. So where do rates sit around right now? Like low 6s, kind of?
Yeah, low 6s. And the interesting thing that will be coming in the months to come is Fannie Mae and Freddie Mac have made some adjustments to their risk factors. Mm-hmm. Meaning, when I first started, if you were doing a cash out refinance with a 620 score, or you were doing a purchase with 20% down and a 780 score, you got the same rate.
Right.
So there just weren't these adjustments, risk calculations that come in. Fannie Mae, Freddie Mac tend to play with those risk calculations to make some situations more expensive, others less expensive. So you'll see each scenario, depending on different criteria, can vary a little bit on rate, which is always why you always want to be cautious about any marketing piece, and you read the fine print as to what it will be, because each situation will be a little bit different. But in general, for more vanilla stuff, low sixes is kind of where you're seeing mortgage rates currently.
Cool. Where did they start out at in the beginning of the year this year? Because we're about 3-4 weeks into 2023 now.
Yeah, we've seen almost a steady decline in rates. It hasn't been certainly to the pace that they went up last year,
Right.
but we probably started the year in and around 7, upper 6s. So we've seen rates come down 0.5% or more over the last 3 weeks. And it just feels, Brandon, that we're all hoping that trend continues. You know, we felt so beat up over last year that if we can see that headlines start to relax, the Fed start to, say, hey, we're going to be okay, and people will probably come out of the woodwork, but time will certainly tell.
Do you get a lot of people right now kind of coming out of the woodworks and everything like that, saying like, hey, Skip, it's go time with the rates, coming to 6%? Like, what are you seeing from your clients?
Yeah, absolutely. I think that there's several factors that come into play. And in my opinion, last 6 months of last year, last 6 months of 2022, the number of transactions just weren't what they usually are. So one factor is you've kind of got this pent up demand of people that just didn't do anything last year. Maybe they got beat up because of skyrocketing values, felt depressed because rates were going up. Take that into consideration, along with the fact that typically when the calendar flips to a new year, people start focusing on what they want to accomplish that year. And so those factors combined, you get a lot of conversations.
Right.
So I've been having a lot of conversations with people that say, hey, okay, I think I'm ready to do this. I think I want to kind of participate now. How do I do it? What are the steps that I need to do? So you're starting to see things percolate. And hopefully that will lead to a lot more transactions and activity in the months and weeks to come.
Right. And speaking about activity, I'll pull up something on my screen right now that kind of just shows what DuPage County real estate has done in the past 6 months. And it's been rather interesting when you look at sales absorption. Obviously, the property's for sale. I mean, we have no inventory. So if you're in the Chicagoland area and you're thinking about making a move, it's probably a pretty good time if you're looking at comparing to supply and demand. But I mean, 14.5% of homes under contract, and then 2 weeks ago was 11.8%. That's been the highest amount of homes going under contract in DuPage County since September. So with that being said, interest rates definitely have a big toll, in my opinion, on kind of what's happened in the market here in DuPage County, especially. Especially I feel like in terms of a first-time home buyer, which I work with a lot of, is that first-time homebuyer price here for a single-family house in Wheaton, Glen Ellen, Lombard is probably in that 350, 400,000 range. But what kind of message would you have to a lot of those first-time homebuyers out there looking to get their feet wet in the western suburbs where we're born and raised?
Yeah, well, listen, I'll give you my story. Granted, this was 24 years ago when I was a first-time homebuyer. I remember my wife and I were in an apartment right over by Briarcliff area, and we're like, we're determined to go find a new home. We're ready to go. And as we started looking, we were depressed because we quickly found that we could afford a 1-car garage in the garage only in Wheaton. Forget the house. And so that was challenging. And I think a lot of it is just perspective. If you're a first-time buyer looking in the greater DuPage County area, ask questions. You just want to know what's out there and what it takes to get there. Because if that's where you want to live, great. Come up with a game plan. So whether you contact Brandon or myself just to try to determine what that looks like, awesome. Because you just want to know what you're getting yourself into and avoid the surprises. But don't not look right now because you think values are too high or taxes are too high. There are great options available. I mean, you can get into a home with very little money down as a first-time buyer. Do you qualify for some of those programs, some of those grants? Can I do 3% down? Do I have to save for 20% down? Those are a lot of the questions that I have. So if you've got questions and you're a little intimidated as a first-time buyer, don't be. That's what we do. We're happy to help you through it.
And with that being said, I think a lot of times with you and I, especially, I feel like, we kind of just work backwards with them. And buying your first home, it is a scary process, even when I went through it. And, Skip and I are here to handhold throughout the whole process because there are a lot of questions. And, it isn't your right it is your right, but you're probably not going to remember everything. But we're here to answer all those questions that come along. But Skip, for also those upsides, people that currently own real estate, but they're kind of in that position where do we have to sell to qualify, or they kind of just have that mindset like we have to sell before we buy. But a lot of times I feel like those people don't. So what is your kind of message for, those people that own a home, that own that ranch in Wheaton, Glen Allen, Western Suburbs, but want to move up to that 2-story, 2,800 square foot home in Stonehenge?
Yeah. Stonehenge, my old stomping grounds, Middleton Drive, baby. I think for the most part, people will qualify for more than they care for. So as I look at, especially this time of year, my opinion is it's a great time to try to sell because, as you alluded to, Brandon, there just isn't the inventory. So you're not competing against others. So you've got this, like I said, in my opinion, some pent up demand. You're still seeing multiple offers out there.
Right.
So I think the key is let's talk, right? If you have the ability to put some money down on the new place, you might be able to get in there without having the current home sold. We can talk about doing a form of a bridge loan or a home equity line of credit that are some options. So again, historically, people have just thought, I sell and then I buy, but that might not be what the route you want to go to make it easier to get the house of your dreams. But let's talk through it because everyone's different. Nobody really wants to hold 2 mortgages forever if they don't have to. But are there scenarios that we can avoid that or do it for a small period of time? Absolutely. It's just worth asking questions. Listen, at the conclusion at the end of the phone call is, hey, this isn't for me. I don't think I want to do that. Or, hey, maybe I'll wait 6 months. Great. Our time's always available and free. We're happy to guide you through it. I think that's the key is we care. We want to be there, whether it's next weekend, next month, next year, whenever the time is right, we're happy to walk you through that.
100%. And I think the best thing, especially with all the clients that we've worked with, I feel like, obviously at the end of the day, we get them to their final destination, which is home ownership. But I feel like a lot of those clients that we've worked with that reach out way earlier in advance, and we just kind of walk them through the process within, 2 to 4 months before they're actually ready. It's usually like very quick when they find a home, know what to do, and it's kind of just smooth as butter. Because I'm always super confident, I know you are too, about just getting people under contract, especially in a multiple offer situation. So
100%. And to that point, I think it's key. I think a lot of times people, especially first-time buyers, aren't sure when to engage us. Right. And they think only when I find a home or that I'm really going to go out and do something, do I need to do something. And I would almost just encourage you, the sooner the better. You kind of alluded to it. This is a stressful process, especially if you were looking last year, nothing happened. It's got some highs and lows. So the more questions that we get a chance to answer up front, the less stressful it is because, you want to go and see houses that you like. And on my standpoint, from the mortgage standpoint, I want you to know what the payment would be on a house before you walk through it. Because if you have no desire for whatever that payment would be, then don't tease yourself and walk through it and fall in love. Because now you fall in love with the home and you got to try to justify the payment. I'd much rather you understand what the payment is. And in case you do fall in love with the home, you know exactly what you're getting yourself into.
Right. Did you hear that, Max Williams? We're going to help you out sooner than later, but we're talking to you, Max. Just came, but I'll talk to you soon. But Michael Barbick here has a question. What about land? Can you get a mortgage on land, and how much of a down payment is required?
Mr. Barbick, great question. Good to talk to you, my friend. Say hey to your family for me. Yes, you can get a loan on land. It is definitely a little bit of a different process, or I should say a different loan program. I'll refer to it more of a portfolio loan program, meaning Fannie Mae, Freddie Mac, FHA doesn't have options specific to land only. It depends on, is it raw land? Is it in a subdivision, that a builder's building on? It's already got water and sewer and septic and everything to it. Typically, for raw land, you're looking at 25% or more down payment. The terms end up being shorter because they want you to eventually build something on it. So it might be a 1 or a 2 year balloon with the thought of doing a construction loan down the road. So the short answer, Michael, is yes, there are land loans. To get your specific question, reach out to me. In fact, I'm going to call you and I'll find out exactly what you're looking for.
He's building the best farm in the Chicago suburbs.
Yeah, he needs more room for his basically his herbs in his garden.
But Skip, I know you love headlines. So what are your thoughts on this headline? Because it's actually pretty good, I feel like, but pretty much weekly mortgage demand jumps 7% as interest rates drop to lowest level since September. Published yesterday, and key points: mortgage interest fell for the third straight week, while mortgage demand rose again. Total application volume increased 7% last week compared with previous week, and then applications to refinance a home saw the sharpest gains, up 15% compared with the previous week. What are your thoughts on that article?
Yeah, and listen, in general, you and I have talked. I'm not a fan of headlines.
You hate headlines.
And the most part, because look at it last year. If you read enough headlines, you felt like you should just dig a hole, crawl in, and not come out for 5 years.
Right.
And now you kind of see the opposite, because headlines make you click, right? So everyone's trying to get something fancy.
Right.
As you look at that article in particular, 7% jump. Is that a jump? It's an increase. It's not anything crazy, but it's something. A fall in rates. It went down from, that article was saying 6.23 to 6.2.
Right.
In my mind, I could even call that neutral.
Right.
But in general, I think that the main thing that you want to take from that article is that rates have been trending lower, which is good. Applications have been picking up some, also, which is good. So what that tells me is that people are feeling better about their pursuit of a new home. And they just, as those headlines are more tame, or if anything, maybe painting a prettier picture of the outlook of this year, more people will come out.
Right.
It's just that simple. So time will tell and how things are going, but at least the initial signs of where things are in 2023, certainly better than where they ended 2022.
For sure. What are your thoughts? Honestly, we don't have crystal balls or anything like that, because the rates tomorrow could be, or next week could be like 8%. I don't know.
Yeah.
Or they can be a 4 tomorrow. But what are your thoughts if the rates drop below 6? Let's say they get that 5.5% interest rate. What do you think happens to the market?
Yeah, it is amazing to say this, because, like I said, I'm not usually a headline person. But if you see rates come down to 5.5, and the articles feel like inflation's under control, Fed isn't doing anything, Brandon, clear out your February, March, April, because you'll be showing more homes. You'll take more listing appointments. Again, I just look at it this way. Historically, the number of transactions just wasn't there the second half of last year. Even in 08, 09, where there were market crashes, there were still people moving. The amount of equity that people were pulling out wasn't there, but there were still transactions to be had. Right. It didn't feel as weird or awful as it did at the end of last year. So if people are feeling better and rates do get to 5.5, man, I tell you, we'll be a little bit busier than we all care for, but you won't be complaining.
Right. Yeah, for sure. I think it's crazy. But I go back to that point too, that you always tell me, is that, at the end of the day, people kind of just buy and sell for life changes, whether, they sell if there's a death, they upsize if they need more space for family, relocating for a job, because we work with a lot of people from this YouTube channel that kind of just relocate to the area for either a job or family. But if you notice on the top of your head, like what is the difference, like in the difference of mortgage, like a rough estimate, like what's the difference and how much do you technically save per month, maybe from a 5.5% interest rate to a 6.5% interest rate on like a $400,000 house?
Yeah, no, it is amazing because it is several $100s. It's going to be closer to about $500 to $600.
Wow.
So it is something. Okay.
Right.
But you said it. And I love what your point was. Historically, let's go back to like my parents' generation.
Right.
When they moved, they never really thought, I wonder what rates were. You talk to people my parents' age and, maybe a little bit younger even, they remember when rates were 14. They remember when rates were 12. As young people talk to their family that's older, they say, oh, you really need to put 20% down. Well, that was, again, a different time.
Right.
So it'll be interesting to see what behavior does.
Mm-hmm.
So interest rate does impact payment.
Mm-hmm.
But what I typically will remind people is if rates are at 7 or rates are at 6 or rates are at 5, it's a very good chance you still qualify.
Right.
Okay. So one of the things I've been trying to encourage people is, like you alluded to, if life's telling you it's time to move, we need more room. Just talked to a nice couple earlier today that they just had their second, thinking about doing something because they need more space. They can't control when that happens and where rates are, but you can always look at refinancing if and when rates allow us to. And again, that's something that we actively pursue at Compass. If there's an opportunity, Brandon, on your place to save you $200 a month, I'll call you. But don't get worried that you have to be committed to that payment forever, because certainly there are opportunities to refinance down the road.
For sure. And I think that's even when I purchased my house, and a lot of the college buddies and high school buddies that I help out with and we help out with is that at the end of the day, I just really care what's my monthly mortgage. I know it's going to change every year with property tax, whatever the case may be, but I mean just relative, like where's my mortgage going to be? Because I understand that I'm at a 6.1% interest rate. I was hating it when you gave it to me, but then the rates jumped up and I was like, oh my God, thank God I got in here. But then, I got a great place, and when the rates drop, I can always just refinance. So, I'm comfortable.
100%. And you said that payment is what you want to look into. Between the mortgage itself, property taxes, homeowners insurance, is there an HOA? It all boils into a pot, and you got to make sure that you know exactly what you're getting yourself into. But yeah, the other thing, people, you always forget, income typically goes up. I might take a new job and I'm doing this. Do I have to? It's all a big life decision. So I think what you do a really good job is talking through, does this fit into that bigger picture for someone? It's not just this small sliver, I'm buying this house. It's big picture. Am I going to be here for a while? Is this something I think I want to be in for 3 years, and then I'll rent this out and go find something else? It's different for everybody. So it's just worth asking those questions. And you always do a great job when you talk to people for the first time, guiding them through that thing.
Yeah. And, we've been on this call for 23 minutes. Thank you for everyone that's jumped on. But Skip, how is a good way for everyone to reach out to you from Facebook, LinkedIn, YouTube, especially if they're watching the replay on this video?
Yeah. Listen, the easiest one is my cell phone, 630-417-9016. You can text me, give me a call there anytime. Brandon will tell you I'll respond at all hours of the day. So if you do have a follow-up question, something specific, you want me to reach out to you, you let me know, and I'll be happy to do it.
Yeah, if you're relocating to the area, Skip has gotten a handful of people that reached out to him last year, and we've obviously found them a place here in the Chicagoland area, and a lot of people reach out to me and usually get connected with Skip, especially with the law relocation that we helped out with last year. Reach out whenever. Honestly, the questions are free, especially if you're looking into different neighborhoods and stuff like that. You're here for a weekend. I'm more than happy to meet up with you, grab a beer or a coffee. And if you're watching on Facebook and LinkedIn, you just need help or any questions on the real estate market this year, reach out to Skip or I. And thanks for coming on, Skip.
Appreciate it, buddy.